Hello, Erin Dalovich with Coldwell Banker coming to you today with my dear trusted friend and colleague, Cindy Kramer with Guaranteed Rate Affinity. Cindy, thank you for coming today.
Hi, Erin.
So today we wanted to dig a little bit deeper into the loan process and how we can help our consumers, our friends, and our clients procure financing. Today we wanted to dig deep on income. Income is a fabulous subject. We all want it. We all love it. We all want more of it. How can we talk a little bit and what can we tell the consumer about income and the type of documentation that a consumer is going to need to procure financing? Let's go, Cindy.
Can't wait. I'm excited about
I love it. I love it.
Okay, so income documentation. It's going to vary depending on what type of income somebody gets.
Okay.
Okay, so let's start with this. Right income here.
Okay.
So differences between a W-2 employee, somebody that works for somebody, right?
Okay.
They're employed by an employer. They, what we call a W-2 employee, they pay taxes, right? They pay Social Security. They're not a 1099 employee.
Okay. So a W-2 employee generally has things like a health insurance policy through their employer, a 401k through their employer. Their employer pays their Social Security taxes, and they get what's called a W-2 versus somebody who's an independent contractor, and an independent contractor is generally a 1099. Is that accurate?
Yeah.
Okay.
Yeah, they're going to get
Okay.
1099. So
Okay.
let's talk first about that W-2 employee.
Okay.
So that's what we call it, W-2 employee.
Okay.
So those are usually salaried. Okay. They
Okay.
could have an hourly wage. They could have a monthly salary, an annual salary, something like that
Okay.
on it. So the type of documentation we're going to need, it's pretty easy for them. Okay.
Okay.
So we love the W-2 employee. We're getting W-2s, of course, right?
Okay.
We could need 1 year, could need 2 year, depending on the loan product.
Okay.
All right.
Okay.
2 years. And pay stub.
Okay.
Probably the month, the previous 30 days of previous month.
Oh, that's
Pay
enough.
stub.
You don't need like 6 months pay stub. Okay. Good
Because
data.
again, we're qualifying them on what they're making now, their current wage.
Okay.
Okay.
Good
The
data.
only other thing about it, let's say somebody gets bonuses or commissions. Bonuses or commissions, we have to show that they've been receiving them, and we also have to average that because again, that can change, right?
Gotcha.
So what I normally do is I ask for year end stubs.
Okay.
So if it's currently 2022, I'm going to ask for 2021 and 2020 end of year pay stubs to show bonuses received and or commissions received.
Interesting. Okay.
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 So,
Good data.
so pretty easy on this. People usually have that at their fingertips they can get.
Okay,
Alright?
so for a W-2 employee, that it's just W-2s, pay stubs, end of year stubs. You don't necessarily need full tax returns. Am I hearing you correctly?
Yeah, not
Okay.
necessarily. In most cases, if their income is only this, so they don't have any self-employment, they don't have, let's say, rental income,
Okay.
anything that shows up on a tax return, we normally don't need it.
Okay.
And we don't want to submit more documentation than is needed.
Good data.
Okay.
Right.
All right. We want to do
Kind of
that.
muddies the water.
Yeah.
Too
exactly.
much data. Too much data.
The next one is going to be your self-employed borrower.
Okay.
Now, this can be a lot of different people. Like you said, somebody could be an independent contractor, so they receive 1099s.
Okay.
And they could file those or report those on their 1040s.
Okay.
Okay, and they could be a sole proprietorship.
Okay.
All right. Then you've got people who are incorporated.
Okay.
They own a corporation. They which is called they're going to show pass-through income. So they
Okay.
have a either a Schedule C or a Schedule S. They might have K1s that get shown on their tax returns as well. So again, and now it starts getting a little bit more complicated based on the type of self-employed person they are.
Okay, so just to kind of clarify a little bit on what pass-through income is. You own your own S Corp, and your top line number, your top line gross income, let's call it 400 grand is your top line gross income. And that'd be the gross income to the business. And then the business articulates and distributes money to the different officers of the business or the different vendors to the business. And then those employees would have their own Schedule C or 1040 or however their income looks like. Is that accurate? Am I hearing you correctly?
Yeah, they're going to receive K1s. The corporation completes K1s for all of the members, right?
Okay.
And those gets reported on the Schedule E on the individual tax returns.
Okay, boy, it really does get complicated.
Right?
I can see why you need to be really full-time and super capable in your business because Jiminy Crickets, there's a lot of data here. But go on, I'm listening intently. It's important stuff.
Yeah. So again, self-employed, we're always going to need individual returns, no
Okay.
matter what type of self-employed borrower they are.
Okay.
Again, if they're 1099 and they show, or they show everything on as a sole proprietor, which is the Schedule C, a lot of letters and numbers going in, that's going to show up on the individual returns. If they're incorporated, we're going to need corporate tax returns.
Okay.
If they're a partner, we're going to need partnership
Okay.
returns. And of course, the associated K1s if there are any.
Okay.
All right.
Good information.
So what we do then is we take all of that, and there's certain calculations, certain formulas we come up with to calculate their income. And it's a lot of work.
Yeah.
So again, another reason to get all of this stuff taken care of well in advance of finding a property, well in advance of looking for a property, because that could determine the price range, that could determine the program that's needed. Very, very important. So it's a lot of stuff.
And and on that too, while you were talking about it, I think it's really important that we do the front load planning. So I'm really proud to be able to say that so many of my clients have been in my life for a really long time. And I really take a lot of pride in that. And I want to make sure that my clients and friends understand, particularly if you're self-employed, how you structure your income through your company and how you structure your tax returns is really important to be able to pick your financing. So to be able to think about that a year, 2, 3 years ahead of when you think you're going to be wanting to buy that investment property or your primary residence, to be able to plan that in advance is a really part of the relationship that we have, and one of the reasons that I really enjoy having long-term relationships with my folks so that we can talk about and plan these lifelong strategies of how to build wealth. So anything else that you think we need to know about documentation at this juncture, or should we do a little deep dive on another video and talk further about it?
Exactly. I can't wait to do that. Again, this is just the starting point. Once we look at this documentation, sometimes we need more stuff, but this gives you a good idea.
Good data. Again, as always, Cindy, it's such a pleasure to get to spend time with you and hear your expertise and your many, many years in the business. I mean, we've known each other for, almost 20 years in this industry together, and it's just been such a pleasure to watch her grow her career and you grow mine as well. Thank you so much for your time watching this video and your business. If you wanted to talk any further about either real estate purchasing, refinancing, or initiating a mortgage on any property, we are here to be of service. You can reach out, DM, and of course, like and subscribe. Thanks so much for your time.
Bye-bye. Thank you.